Well, good afternoon. You're listening to the new WCEG Network on WCEGTalkRadio.com. Click your live stream tab or watch us live on your smart TV, YouTube, WCEG Network. I'm Celeste Giordano, your show host for the Global Legacy and Wealth Building for the next hour. We're the worldwide community empowerment group where we speak life in the community. Like us on Facebook, follow us on Twitter and on Instagram at WCEG underscore talk underscore radio and at WCEG Network. We're also on Fanbase and Blue Sky. Our last but not least disclaimer, the topics and opinions are those of the show host and guests and not WCEG Network. Thank you for your continued support, and thank you, Penny Rogers and our board of directors at WCEG Network, for the opportunity to come to you live with this platform for global legacy and wealth building. Hey, Sara Poe, how are you today?
Good, just trying to stay warm.
I bet you are, and it's so glad to have you here on the show tonight as our guest expert. You're usually one of my co-hosts, but you're our guest expert tonight, and that means it must be tax season. And we are so excited to have you here. Now, you're in Georgia, and I normally would be in Georgia. I'm in Kentucky, so the weather down there has been extremely cold. And did you get any snow?
We did, but I was very fortunate that the cold wind and the rain didn't come in at the same time. So we got sleet instead of rain. So the power lines and all that didn't freeze up near as bad here as they could have.
That is a blessing, that's for sure. I've been watching our house through our alarm system and video cameras, and we didn't lose any power there at the house. I had the neighbors go turn the heat up a little bit because normally I turn it down. And I'm thankful that my mom's house didn't lose any power or anything as well up in Tennessee because Tennessee was hit really, really hard. And I've been up here with Mike in Kentucky, and I'm gonna tell you what, I think we got 14 inches of snow, and today the wind chill was like minus 13
Ooh,
degrees.
ooh,
And I came for a long Martin Luther King weekend, and I'm still here, so I'm crazy. I'm ready to go south. I was supposed to be in Miami Beach this week. But it's all good. We're blessed. And, we do need to take a minute and a moment of silence, and we need to pray for those people that were affected by the storm. We were blessed, you were blessed. And, there are a lot of people without power still throughout the United States with the storm. Uh, we've had a lot of tragedies and things that have been happening. And so, we have some people in Nashville, Tennessee that have been without power since Saturday, and they're
mm.
still without power. And so, and with everything that's been going on in Minnesota and everything, I just like for us to just take a few minutes and just take a silent prayer for those affected by the storms. We got another storm coming up this weekend. And for all those people in Minnesota and what's going on, and for our country, we just need to say a little prayer for those people. Okay, thank you very much.
Well,
Well,
thank
Sarah,
you.
yes, absolutely. So, for our audience and listeners, and if you have any questions, I want you to put them in the chat because Sarah's here to answer all your questions. This is the 411 on your tax season. And Sara Poe is the founder of Poe's Accounting Services. With nearly 40 years of industry experience, Sara Poe specializes in helping individuals, families, and business owners in Lawrenceville, Dacula, and Brazelton, Georgia, understand and manage their finances. Her approachable, honest, and detail-oriental style has earned her a reputation as a trusted advisor in the community. What Sara offers is simplified financial and tax solutions, customized systems for businesses, personal financial guidance for family and individuals, and support during tax season to reduce stress. Sarah views her clients' financial health holistically, balancing big picture strategies with attention to detail. She understands the responsibilities of local business owners and uses her expertise to help them succeed. Sarah is also a graduate of Georgia State University. She previously worked at Viasalt. How do you say that?
Why is that?
Viasat. Okay. All weather, heating and air, refrigeration, Poe's Construction. She founded Poe's Accounting Service in 2009 to give her clients a personalized, community focused service. And when not balancing budget, Sarah enjoys time with her children and grandchildren. A former wannabe rockette, I love that story. She now channels her energy into helping clients kick their financial goals. She is also very active in her church and volunteers at the Women of Community Impact. You're one of our co-founders, and you can reach Sarah at spo at poecpa.com, and her phone number is 770-545-8841. And Sarah, we are super excited to host you here today. I know that you have a wealth of knowledge to give our listeners and our audience today about the 411 on our taxes. So tell me, how's things going for you today in Post Accounting Services?
We're doing really well. Friday's our first big deadline with W-2s and 1099s, and the weather threw a couple of kinks into it, but that's life. You
Well,
just keep on rolling.
absolutely. So I'm sure you probably had to close down a few days, right?
Yeah, so I thought the weather was coming in Friday. So I had everybody work from home on Friday, said take all your stuff. So, Monday, because I didn't think they'd be able to get in the office on Monday. That way, if you want to work, you can work, or you can take a vacation day or whatever. But luckily everybody worked on Monday. None of my people lost power, thank goodness. And we were just blessed in that regard. So, most people just worked from home yesterday.
Right. Well, and the schools have been closed, and I think I just got a notice that schools are closed again tomorrow, working from home. I mean, you know, whatever they call that from
Virtual
remote
learning.
virtual learning. Thank you. So, the temperatures are just unbearably cold. That's for sure. And I know they are up here. The schools have been closed up here, and a lot of the businesses they closed Monday, and some of them are still closed today because the temperatures are unbearable. They're very fortunate. I haven't seen a lot of people without power up here, but down south, and Tennessee and Georgia's a little bit different. That's for sure.
Yeah. Mississippi got hit pretty bad from what I understand.
Yes, they did. A lot of people lost power there.
Yeah.
So let's start off with Sarah. How can a business be more organized this tax season?
Well, the reason why I bring that up, okay, is because so many things changed this year with the
Oh,
big beautiful bill, right? So we've
right?
got new things happening. So if you're organized, know what's going on in your business, it'll make everything easier, right? So when the business does come in, okay, I've got these questions, these are the things I'm looking for. I need to see your balance sheet, I need to see your P&L. Why aren't these things balanced? So, and then my first question is, why aren't things reconciling? What's the issue, right? So if you are organized before you come in, we're not having to go through all those steps, right? I can look at your P&L, I can look at your balance sheet, know things are okay. If I did your bookkeeping, I've already checked it over, so I'm not worried about that. But if you come in here and we've got a lot of unanswered questions, that just puts you backwards, right? It doesn't push you
Absolutely.
forward. And that's what we're looking for at this point in the stage of the game, keeping you moving forward, keeping those people, getting them filed and out the door and moving on.
Well, and that's a great question, Sarah, because, also from my perspective as a business consultant and things of this nature, businesses, you need to get a P&L statement. If your business is small, maybe you don't need it monthly, but you need it quarterly.
Yeah,
throughout the year. And if you're a bigger business, you definitely need to get it monthly because if you don't, like you say, if you don't have that, when it comes time for tax season and you take that to your CPA or accountant, it's going to cost you more money for them to go back and reconcile all that. Where if you already have that done, your tax bill is going to be less, correct?
that's correct. And also, if you need me to do it this time of year, it's going to cost you more money because now I got to set some time. I got to, one of my people got to set time aside to do that. And you want me to do a year at a time? If I can do at least quarterly or monthly, I've got a plan. But if you need me to do it all at one time, it takes time off my plate that I don't necessarily have, especially in a year like this with so many changes going
Changes,
on. Yeah,
absolutely. And again, as a business, a CPA and an entrepreneur and things of this nature, your business is growing in leaps and bounds. And as you said, that is a very time consuming process for somebody to come to you and not have their balances or check and balances. I mean,
yes,
it's ridiculous. And most people, like you say, can't do it, or it's going to cost you a fortune, or yours isn't going to get done till later on.
right. You're going to agree to letting us do an extension for you because this time of year it's hard to get all the books the people who aren't done, right? Because we have several different things we have to make sure are correct, and we don't necessarily have that time this time of year.
No, not at this time of the year, that's for sure. And also, you know, you're having conversations with people in the last quarter of the year. So the last for October, November, December of 2025, people that do get their monthly P&L or their quarterly P&L, you're having conversations with them where you can make good advice to these people on what they need to do before December 31st, so they'll have better tax advantages in 2026, correct?
That is correct. Yes, please always ask before the year's over with because there's not as much that can be done after January 1st.
Right. So if you're not reconciled and you come in now, you may have missed some great discounts or things that you could have checked off the box there.
Absolutely.
So my next question is the salt deduction change for 2025?
Yeah, so we had a lot of changes. I've got there's a ton of business stuff out there, but I really wanted to concentrate today on the personal side because so many things changed on the personal side. If you've got a business question, my biggest concern with the business is just be prepared. Go in there because your first deadline is March 15th. So if you're not prepared, you may not make that deadline, right? And not
Right.
everybody handles that well. So that was my biggest thing I wanted to say to the business people. But if you got a business question, don't hesitate to let us know because I'll be happy to answer that for
Well, and
you.
also I just want to reiterate that you do have until January 31st, is it, to get your 1099s and W-2s out,
Yeah, which is Friday.
which is fine.
Yeah.
And anything else that they need to have out this month
No, they got to be in the mail by Friday.
by Friday.
Yes. They don't
And
have to be in the person's hands. They have to be it has to be either postmarked or emailed, right?
right. And also another thing for the businesses before we move forward, since we're going to focus on personal,
Okay.
um, is that a lot of businesses, may have been used to doing things manually and stuff like that. Today, almost 99.9% of it is electronic filed, correct?
Yes. And you can no longer get a paper check, business or personal. It is now you have to have direct deposit.
Very good. Very
And
good.
they're doing that for fraud reasons, right?
Right. Absolutely. Okay, so we ready to move forward? Do
Sure,
we,
let's do it.
let's do it.
So salt, um, it is sales tax, real estate tax, those type of taxes up there on the top of the schedules A. So they changed it in 18 that you could only take a $10,000 deduction. Okay. In the South, that's not as big of an issue because our real estate taxes are not as high as they are up in the North, right? Up in
Right.
the North, they wouldn't even get to take all their real estate taxes because sometimes it's more than $10,000. Okay. So they changed it to $40,000 that went into effect in 2025. Okay.
Okay.
So that is a big jump,
Yeah.
right? So I had some people that didn't get all their deductions here in the South, but not near as many as the people up north. So that is a huge, huge adjustment for that because at least here you could 9 times out of 10 get all your real estate taxes. You may not get your sales tax or your car tax or some of those other small little items on there. But at least in the South, most of us got our real estate taxes, not unless you were living in the Biltmore house, right? In
Right.
North Carolina. But so up north, that was a huge, huge deal. So that's one of the main reasons why they did that. Now, it will phase down by 30% if you're above $500,000. And if you're married filing single, it'll be $250,000. So it does phase out with those income levels, right?
Right.
Um, but that's still a better deal than it was last year at this time.
What was it last year at this time?
$10,000.
10,000.
And now this year for 2025, it'll be 40. That's huge.
That's huge.
That's
That's
huge.
huge.
That was one of the biggest issues with the Tax and Job Acts from 18. One of the biggest things that they did not like. So that is the biggest thing that'll affect more people than just about anything. So I wanted to make sure people understood that.
So explain that a little bit. Can you peel the layer back a little bit and put it in common terms for people that are listening? How do they get that $40,000 tax break? Does it come
So,
off?
so it comes off on your Schedule A, right?
Right.
Which lowers your taxable income, right? So, which is on the front page of a 1040. I didn't even think to put a 1040 up here so we could look at it. But so last year you only got the $10,000 on. You may have gotten your home interest. You may have gotten some medical and dental. You maybe got some charitable. But that $10,000 really started limiting people's itemization. Okay.
Right.
And then when this went into effect, not every state changed how their itemization worked, right?
Right.
If you lost itemization, typically for some states, not all states, the state of Georgia, you lost a bigger deduction on the state of Georgia return also. Okay.
Okay.
Now that itemization, one part is going back up to $40,000, your standard deduction may not be as high. It may not be the higher item on your tax return anymore, right?
Okay.
Because standard deduction has been going up. So 9 times out of 10, a lot of people weren't even trying to itemize because of the $10,000 for the real estate, sales tax, property taxes, that sort of thing. So with this new item, 40,000, your itemization may be larger and you get a bigger deduction on your tax return.
So if your house is paid off, you automatically, off the gross income, you get 40,000 taken off of that?
It's not a true, it depends on how much you have. Let's just say, all right, so my real estate taxes are $10,000. Okay.
Okay. You're talking about property taxes?
Yes, the
Yeah.
property taxes you pay on your home.
Right. Okay.
Let's just say that's 10,000. Then I've got income taxes that I paid of another 12. So now we're at 22,000, right? I
Right.
got some miscellaneous taxes. So I could be at 25,000 right there under the SALT deduction. Not, but if your house is paid off, you won't have any home mortgage interest.
Right.
You may have some medical, you may have some charitable giving, that sort of thing, right? So now your itemization is at 25,000, where previously it was only at 12.
12.
Right? So all that can make a big difference in your taxable income.
Okay. I
It's not
got you.
full 40. It depends. Now, if you had $30,000 in real estate taxes, you know, you're getting $30,000 deduction, where the previous year you only got 10. So that's a
10.
$20,000 difference.
That's a huge thing. That's
Yes, it
huge.
is.
It's huge right there. Very good. Anything else on the SALT deduction that we need to know?
No, that's the biggest part right there.
So what about no tax on tips for 2025 to 2028?
So, they were trying to help people who receive tips, right? So they were trying to make it so that they could have some more income in there and not have to pay taxes, right? So the maximum deduction is $25,000 that you get on tips. It does phase out at $150,000 for single and $300,000 for married filing joint. Okay. So let's just say I'm a bartender. Okay. They keep track of my tips, because majority of people pay
Pay
tips
by
these days
credit card.
by credit card, right? So when I get my W-2, I will know how much of my income was tips.
Right.
So all that will have to be put onto your income tax return. I haven't done one yet to tell you exactly how it's going to be done, because it was a last minute change. It'll change in 26 how it's done, but to get us through 25, we will have to have the W-2 to be able to make sure that you've gotten the correct amount on that.
Right.
But so that $25,000 that is not taxable to an individual, say you're going to school full time and you're working as a waitress or bartender, or you receive tips as a hairdresser. There's all different things that you receive tips on, right?
Right.
It's a nice little chunk of change that will not be taxable.
Oh yeah. I mean, at 33% or whatever, right?
Right.
It's
Even if it's at 12 or 15,
12%. Yeah.
right. All that adds up over time, right? Um, it's just to help those people, maybe to make it a little bit further on the income that they're bringing in.
Right. Absolutely. Well, and that's good. And that, like you said, I think that just went into effect at the latter part of the quarter, right, of 2025.
In the last half of 2025, it went to effect.
It
Yes.
went into effect. Absolutely.
Yeah.
So what about no tax on overtime?
So overtime, it's another beautiful thing, right? From 2020, that will be in effect from 2025 to 2028. As you can see, both of these things are only for 3 years, 25, 26, 4 years, 4 years, right? Partly, I think they want to see how it's going to work and how are they going to fund for these deductions later, right? So
Right.
we need to try different things to help people have a larger income, and to help maybe plan for some retirement, different little things like that people need to be doing, and not necessarily waiting on Social Security to come in. If we can have some retirement saved up, or a 401k, a pension plan, there's so many other different things you can be doing. So some of this is to help people to be able to do that, right? So if you're not being taxed on every penny you make, hopefully you'll divert that money to some other form of retirement.
Well, the other thing on no tax on overtime is it didn't really benefit anybody to work overtime because it put them in a higher tax bracket, right?
Yeah,
They
it could
took
have, yeah.
they took more money. I mean, you barely made any money when you worked overtime.
Right, right. So we're hoping that they're looking at these things, in my opinion, and we all know what that's worth at times, in different ways to try to help middle America, right? To
Right,
be able to have more cash in the door. Um, so the biggest thing is just trying to help them bring in more money to live day to day, right? Um, the overtime, so different people have there's different laws for overtime, right? Your salary, you don't typically get overtime, all that kind of things. That's something you need to work out with your employer, right?
right.
But for these people who do get overtime, these hourly people, I've got hourly people that work for me, right? If they get overtime, they deserve to be paid properly for that. Now, if you're an employee who's not paying your people properly, just know that the Department of Labor will find you
That is so true. That is
because because there's nothing worse than messing with somebody's paycheck.
right. And good people don't stick around with that. That's for
That's right.
sure.
That's
So,
right.
so for people filing their personal taxes where they work in an industry where they get tips or they work in an industry for overtime, Sarah, what are some of the things that they need to bring in to their CPA or tax professional when they're filing their taxes?
One thing I would do is I would, now that you know about it, I would try to keep track of it so that you can prove that what's on your W-2 is correct. So every week or every time you get paid, I'd be looking at your pay stub to verify the information is correct. There was a lot of changes last year, right? Um, if a system is not working properly and people aren't double checking that, they're not going to fix the system, right? Whether it's the payroll system or whatever that could be. So that's the first thing I would tell people to do. I wouldn't know. Well, I know because I'm just that type of person. I'm a detailed person. I know when I look at my pay stub if it's right, wrong, or indifferent, right?
Exactly,
Not
exactly.
everybody is like that, right? So I would attune myself to start paying attention to that because for the first 25,000 of no tax on tips, that's huge, right? We want to
Right.
make sure we're doing that. For no tax on overtime for a single person, 12,500, and for married filing joint, another 25,000. So let's just say I got no tax on tips and I have a possibility of being able to work overtime. I got $25,000 here and I'm single and I got 12,500 here. So now we're talking $37,500 of additional tax deductions.
It's
That's a
huge,
big dollar
huge.
now.
That
Yeah.
is.
So we need to be able to keep track of this and make sure that the systems that are reporting it are doing it correctly. Bring your last pay stub with you so we can double check that against your W-2, those type of things. If you keep a log of that sort of thing, most people don't keep logs anymore. Um, most things are done online, but be cognizant of those type of things that you need to do.
And that brings up a good subject, Sarah, and we won't stay on this long, but for those people you with overtime and for tax on tips and things of this nature, you're relying on an employer who's hired somebody to put that data entry in and to do it correctly.
Right.
And so therefore people are human, they make mistakes, they transpose numbers and things of this nature. And so, a lot of people they get pay stubs and a lot of people just get their money direct deposit, but you have access online. You
Mm-hmm.
should be keeping those things and printing those off, and keeping them so when you do go do your tax thing, you it's if your tax professional is asking for something, you have it that you can give it to them. You don't have to go back and do it. I mean, you don't have to maybe keep it once your tax has been done. But again, you need to monitor it. You need to inspect what you expect because people do make mistakes. They're human, so they can say that you made more money than you did or less money than you did, and you need to look at it every week. Some people are just grateful they got a paycheck and they just put it in and they're not paying attention to the detail, right?
That's absolutely. Detail's important, especially when it
Yes,
comes to taxes. Detail is very
absolutely.
important.
And then at the end of the year, they look and they say, I didn't make that much money. Well, as they say you did. And now you got to try to go unscramble that mess for 52 weeks.
Yeah.
That's a
Yeah.
heartache.
It's it's amazing to me how many people go, well, I don't need to file taxes. I'm like, did you make such and such money? Did you have this? Did you have that? And like, yeah, then you need to file taxes, right?
Right,
Well, what do you mean? It's all it's the more things change, the crazier it gets. So just be cognizant of those things. People, your tax professionals, CPAs, EAs, whatever that may be, we are constantly taking classes because the federal government just loves us so much and they love to change everything in November and December, right?
right.
We get we get frequently asked questions, answers to those. We just got some of these last week.
Wow.
So how is an individual who doesn't deal with this all the time, how can they actually prepare their taxes and do it correctly without knowing how the law works?
Right. So there's also another thing. What about car loan interest deductions for 2025 to 2028?
So that's something brand new. Okay. So if a taxpayer purchases a new personal use vehicle, not use vehicle, loan must originate after 12/31 of 24 and be secured by lien, right? So you got to have a loan on it. Okay.
Right,
Vehicle must have final assembly in the United States. Okay. Not the full car, the final assembly. VIN must be included on the return for any year claimed. So that the VIN number is how the government is double checking that it's being done properly.
right.
With AI, they can check for that VIN number very quickly. Okay. So remember that when you're doing this part of your taxes. Maximum deduction is $10,000 of interest. That's interest. That's not principal. That's just interest. Okay. Now, so that interest could take a couple years, right? So you're not having to take all $10,000 in 1 year, right? I hope nobody has $10,000 of interest in 1 year in a vehicle. I'm sure it can happen, but I hope they don't. These phase out at 100K for singles and 200K for married filing jointly. Okay. This is, as you can, just about everything we've talked about has a phase out. Why?
Right,
For different reasons, right? So that people who are making higher income should be paying more. There's arguments back and forth either way. I'm not getting in the middle of that. I'm not talking any politics. This is just what we have in front of us. So there's always phase outs for different reasons. Leases do not qualify. Okay. I know lots of people who like leases because they like to change that car every 2 years, right?
right.
It's easier for them, right? They like the latest and the greatest. So every 2 years they get a new car. Well, that lease does not qualify for this deduction.
But do
Okay.
you get a deduction for a lease car?
No,
No.
not as a personal, not as personal. No, you could for business.
Business,
You could for business, but not as personal.
not
This
for
deduction
personal.
right here is personal. This $10,000
Right,
is personal. So there's a difference there, right? But these three things right here that we just talked about, or four, there's a lot of big swings that could happen for you. hopefully that if you usually owe and you're really, really close to that line, some of this stuff can get you under where maybe you get a few $100s back, right? The biggest thing I try to do with all my clients is if we plan well, that they're not paying a lot and they're not getting a lot, because one, they wanted to control their own money, right?
Right.
No, I do. I don't want somebody else controlling it for me. But if you can plan these things, you can have those conversations with your tax professionals, you have a better chance of making those adjustments so that you are closer to that zero line, little above it or a little below it. We want to break even as much as possible.
Possible. Yes.
Now, if I go win the lottery because I'm getting out of this house tonight because I got to get out after the past few days, I'm going to buy me a lottery ticket. Now, when I win the lottery on that ticket I buy tonight, there's not a lot I can do for you when it comes to taxes, right? On that lottery, we
All right.
get a lot more other things.
I want you to buy me a lottery ticket, put my name, take a picture, and send it to me, okay?
But it's harder to plan for that, right? But um, it's just there's so many little different things like that that have changed. I have
Uh,
spent hours and hours in classes. The people in my office have spent hours in classes. Like I said, we just got some, they call them FAQs, frequently asked questions, a week ago on some of this stuff. And we're almost at the end of the month, right? So just just know that if you're unsure and you have a tax professional on any of these things we've just talked about, either call them and make an appointment on the phone just to talk to them, to ask your questions, right? Or send them an email saying, I know you're busy. If you could just look at these questions, I'd rather get an email than a phone call, because then I can do that. I can do my due diligence. Then I can email you back. You've got it in writing. I can do that, after I'm home or those type of things. But
anytime, yeah.
don't hesitate to ask the question. Okay.
So, Sarah, we're like at 5:37 at the hour right now. So, how can our listeners and our audience get a hold of you? And can they have a complimentary call or make an appointment, or how do they go about all that?
Yes. So you would call Jennifer in my office at 770-545-8841, and she can set up a phone call. She can set up a Zoom call. She can set up a face-to-face. I do a 30-minute complimentary call or talk or face-to-face, whatever that may be. So I tell people, you interview your babysitter, right? You interview your financial guy. This is a way for the two of us to talk and see if we get along and everything's fine,
Be a
right?
good fit.
Because nothing worse than working with somebody that you don't get along with, right? So those 30 minutes help you meet and greet. Does that make sense? And see if you're going to gel and get together.
Absolutely. And if somebody wants to email you a question, how would they email you?
So my email is SPOE@POECPAS.com.
Absolutely. And if they send you an email, you'd be glad to answer it for them,
Yes,
correct?
yes,
And you should have a personal relationship with your CPA, your financial advisor, your banker, your insurance person. All these people are key people that you need to have a relationship, that you just don't go see them once a year. You need to at least see a CPA or accountant, whoever's doing your taxes, a couple of times a year. Have conversations with them, because things change. And that is so important that they know these things so they can help you plan for what you need to do before the end of the year gets here. So you will pay the least amount of money in your taxes. Correct, Sarah?
that is correct. And don't wait to the last 2 weeks of the year, because like most people, we like to take time off too, before the end of the year and before the busy season starts. So make those appointments in August and September, right?
Yeah. Absolutely. And for those of you getting your text prepared right now, the early bird gets the worm. You want to get in there and get those appointments early because I am sure you are booking up way into February and March and everything else. And the later you wait, the longer it's going to take and the likelihood you may have to file an extension, correct?
That is correct. I will tell you, if we don't have your business information probably by February 15th, maybe even the 20th, we can't promise that that business return will be done by March 15th.
So again, we want to get that done. So I have another question for you. And also, I want to take this time also to thank WCEG Network for this opportunity to bring this platform together about your 411 on your taxes with Sara Poe and Celeste Giordano at celestegiordano.com, which this is also our nonprofit show, Sara, for womenofcommunityimpact.com. So we're excited to have this information here. Is seniors additional deduction at 65.
Yeah, so there was a lot of talk during the campaign of not taxing your Social Security. Okay.
Right?
That to do that through the Social Security Administration is a lot harder than you think it would be. Okay. So what the plan, what they're doing now is every taxpayer over the 65 plus gets an additional $6,000 off on their taxes from 2025 to 2028. Again, this is one of those things, just like the Tax Job and Acts from 18. I think they're going to try some of this stuff out, see what sticks, what's good, what's bad. Because when they plan these things, you can't think of everything,
Right.
right? You can't think of every situation that could happen. So a lot of times they plan these things for 4 or 5 years. In the Tax Job Acts, a lot of those things were made permanently after the end of 24. So we knew in 25 what was going to happen. But so if you are over 65 and you're single and you make up to 75,000 K and you're married filing jointly making up to $150,000, you get an additional $6,000 per person. So if you're married, that's additional 12 on your
Well,
taxes. If you're single, it's 6. So for
right.
me, it's 6, right? Because I'm single, right?
Okay.
For you and Mike, it would be
It's
12.
12.
And that's huge because typically after 65, your income levels typically go down, right? Um, unless you win that lottery again, right? But I'm trying to manifest it. Can you tell?
Well, I'm manifesting my ticket, so I better you better give me a ticket.
So, but, those typically as you get older, your income levels aren't as high, your pension, your our 401ks, those different things. So that is a nice little deduction at $12,000 for a
So,
couple.
so what if you're 65 and you're still working and you're over that 100 and so
Then you don't get the deduction. You
deduction?
phased out.
You
Yes.
phase it out. Okay. Any other
Maybe it's
deductions for
time to retire.
All right. So I got a couple of more questions. What is the number one mistake people make when working with a tax professional?
They don't tell them everything. I mean, I had a client, I talked to his financial guy today. He goes, well, I've been talking to,
So and so.
yeah, I was trying to think of a crazy name and I couldn't think of anything.
Mr. Hunkapeller.
Yeah, yeah. So, I was talking to him and I just found out he hadn't told you about his 401k he's had for the last 5 years. I'm like, he said, what?
What?
He is,
Five.
yeah, 5 years. Yeah. So, that's not a fun thing to have happen. If I don't know, I can't help you, right? I can't do my best job if I don't know what's going on in your life. One of the first questions I asked is, how's life? What's going on? The reason why is because I need to know life events, even if it's the smallest thing. And I've told this story several times. I was working with a couple, and the husband goes, "God, I wish we could write off all those wigs you buy." And I go, "Well, why do you buy wigs? Is there a reason for that?" She goes, "Yeah, I have a disorder where I lose all the hair in my body." "Oh, does your doctor prescribe those wigs?" "Yes." Guess what? That's a medical write-off. But if
That's
he
right.
hadn't said that, I never would have known, because by looking at her, she's got a wig and I don't know, right? So those are the type of things that we need to know. The other thing is the Trump account that went into effect for babies being born. Okay. Um, Let me just get my little piece of paper on that. Trump accounts, eligible kids born from 1/1/25 to 12/31/28. Okay. You're going to get $1,000 put into a bank next year in July 4th of 26. Okay. We have to put that on the tax return, right? I've got a nephew who had a child born a year and a half before that. He will qualify, but it'll be have to be done on next year's taxes. This year's only for people who were born in 25. So in 26, we will take care of his child, because again, they're phasing that in so that they're just doing one type of return at a time. The state of Georgia, if you're pregnant, that's additional deduction, not on the federal, but on the state of Georgia. So you could be pregnant and I wouldn't know it, right? Plus, I'm not asking that question. I don't want to get slapped or whatever because I asked that question, right? You need to tell your tax preparer things like that. Guess what? We're going to have a baby. You may tell me before you tell anybody else. What you tell me goes no further, right? But
Right.
it's just things like that we need to know. We can't do our job well without having all the information. That is the biggest mistake I see.
Well, and that leads me to the next question, which is why it's so important for you to expand on those tax organizers that we received. Why should we fill those out?
Because it helps remind you of things that have happened, right? Oh, I got married. I had a guy didn't tell me for 18 months he was married
Was he
because
filing single? He's filing
he
single
was filing single. He was missing out on things he could have gotten because they could have filed married filing joint.
jointly.
Maybe they decided to do married filing separate, but we just kept them at single, not married filing separate. So all that could, if that was ever caught, right, that could be an issue. It could be a small penalty, but it's not worth it. Just let me know what's going on. Maybe you adopted a baby. There's an adoption credit that you could get, right?
Right.
If I don't know that you're going through the adoption, I can't help you with that.
Absolutely. So has anything changed with donations? Did they raise it or lower it or
Not this year.
not this year? Okay.
Next year, there's so many people were getting the standard deduction that they were losing the charitable deductions. In 26, there'll be some on the front page, like during COVID, we had a front page deduction for charitable
Mm-hmm.
giving. Some of that's coming back next year, but not this year.
Not this year.
Not
Okay.
this year. But so if you don't get the itemized deduction, at least you'll get something.
I
But
get.
and now more people may get itemized, so that may be helpful, right? If you don't get itemized, talk to me. Let's plan your charitable giving so that it does benefit your itemized deductions, right?
Absolutely.
Right? It's all little tricks of the trade that we can help you with. But if we don't know, we can't help.
Absolutely. So what should I do if I'm not sure if I got all my tax documents? How do you know, like, if you got a 401k here and this or that, and you got so many documents, how do you know you have all your documents?
Well, after January and maybe even February, you can call the IRS and get a wage transcript. And anything that you made income off of will be on that wage transcript. Now that everybody's having to report things electronically, that information is getting there sooner.
Sooner.
When things were being reported by snail mail slowly, then they would have to input it. It took a lot longer to get that information. But every year, my first question is, did you have any crypto or that type of a transaction this year? That is one of the questions on the tax return. You'd be surprised how many people go, no, they forget about that $5,000 that they were given for crypto, right? Or some companies will give you $500 just to play with it, right? Because they're trying to get people interested in it. Then you get a letter 2.5 years later, you forgot to put your crypto on there. So
No,
you have to come back and we have to fix it, right?
right.
So those are some of the things that happen. Or you've got a really old dividend you forget about. You got some Coca-Cola stock that you've had for 50 years or you inherited, and this is your first year and you forget about it. Right. So 2 years later, you get a letter, that little white envelope from the Internal Revenue Service saying, oh, you forgot about this on your tax return.
Well, and that leads me to the next question. I mean, we've got about 9 minutes, Sarah. Um, is how AI impact my taxes with the IRS, and with this AI, how quickly information goes through the system.
Oh, absolutely. So one of the biggest things that I see and hear and talk about is S Corp owners that own S Corp, have S Corps.
Right?
You are required to have a salary, a reasonable wage salary. Okay. I've been telling people for 2 years now, AI is looking at that S Corp return to make sure that that salary is on there for that business owner, right?
Right.
You can do it in seconds, probably milliseconds. It knows exactly where to go to look. If it's not on there, you may start getting letters saying, where is your reasonable salary you're supposed to be getting? Because with an S Corp return, you are paying payroll taxes, you're not paying self-employment tax,
Employment tax. That's right.
right? So if that's not done properly, the government's losing out on some taxes, right?
Right.
Well, we we need every dollar we can get, because I don't want my great grandchildren paying my fair share, right? I think everybody. I'm not going there because that's political. Sorry, but I just state that AI is going to be looking at everything in milliseconds to see if it's there, and if not, you'll get a letter. It'll be a
Right.
computer generated letter.
Well, they're being more proactive. They're being used more. And where it used to be data entry through the IRS agents and stuff like this, AI, they're probably scanning things through now that AI is doing a lot of that.
Oh, absolutely, absolutely.
So you just need to be aware. Um, first of all, you need to be honest and ethical and moral in what you're doing. And the thing of trying to hide and deceive and do something is not the way to go anymore.
No, no, it's a lot easier to be caught than it was even 5 years ago, right?
Exactly. So it's just we have a question. If a spouse passed away in 2025, will the living spouse have to file the deceased spouse taxes, or how does that work?
So if you've been filing jointly, you'll still file married filing jointly. Okay. Your deceased spouse will have income up to the day they die on
Uh,
that tax return. Okay. If you have stocks and bonds and things like that, all that will be on there for the year, right?
Right.
If they have a trust or some other things, a lot of people set up trust after a person dies, an estate that takes over the day after death. For if let's just say when I win the lottery tonight and God forbid I die in 5 years and I took the 30-year payoff, right? So I'd still get that year's payoff, but the day after I die, it would go on an estate or trust return.
Right.
Okay. Because I received that income after I died.
Right.
Okay. But up to the day you die, the income you make goes on your
Tax return.
tax return.
Yeah.
Okay. So they will file that. I would make sure you got a copy of the death certificate with it. If it gets filed, you may have some issues e-filing it because the Social Security Administration's already put a hold on that
Put a
Social
hold
Security
on.
number, right? So be prepared to send that return, Federal Express, overnight, UPS, however you deem to do that, right? Be prepared for all that because you may have to physically just sign that return because that Social Security number has been frozen.
Right.
It's not
Exactly.
anything you've done wrong. They're just protecting that Social Security number. All they're doing.
Absolutely.
Right? If you're having to go through probate, you may have to wait a little bit longer till it goes through probate. There's all kinds of reasons that different things could happen. Has nothing to do with you. It's just trying to protect you and your spouse who's deceased.
Absolutely. So we have about 4 minutes left, Sarah. Is there anything else that for our listeners that you need to add for them to know about getting ready to file their taxes, whether they're personal, single? Here's another good question. Didn't they up the gift tax? What is the
Yes,
gift tax?
it's back up to a total of over $5 or $6 million. I don't remember numbers because they change. The yearly amount you can give to somebody is now set for inflation to scale up. At one point, it was 14,000. It was 15,000. I think this year it changed again. But you always want to keep track of that. Now, if I win the lottery, I'll hit my $5 million, right? Giveaway.
You're really professing that win
Hey,
tonight.
I'm manifesting. But so you need to keep track of all that, right? If you're unsure how close you're going to be, file that gift tax. It's not hard. Pay somebody, your tax professional, to do it for you. Um, it's better to be safe than sorry, right?
Right. So a person can give up, is it 18 or 19
I
now or
think
so?
it's 20 this year, but I'm not
20? Okay.
positive.
Exactly.
Um,
And
but yeah, so let's just say I was married and we had one child. We could each give him $20,000 and there's no questions asked.
asked.
Right? If
Right.
you really want to do a bigger deal, like you want to pay off their mortgage, you want to give them money for their mortgage, you pay it off. Don't give them the money.
Right.
Right. Because then that's not considered a gift.
Gift.
You give them the money.
Right.
So that you need to keep track of all that because certain things can be taxable, non-taxable. So if you're unsure, call your tax professional, make an appointment.
Absolutely. So, Sarah, we got about a minute left. Again, tell our listeners and audience how they can get a hold of you and take advantage, ladies and gentlemen, of this complimentary call or email Sarah with a question. She said she'll answer it. This is a great opportunity. I have known Sarah now for, I don't know, I want to say about 14, 15 years, Sarah, that we've known each other. And
Yeah.
we've worked together in business and we're co-founders of a nonprofit and we do amazing things. And I'm telling you, Sarah is the real deal. So get with Sarah and Sarah, tell them how they can get a hold of you, please.
Our phone number is 770 545-8841. And as for Jennifer, then my email is spoe, SPOE, at POECPAS.com.
Absolutely. What a wealth of information this hour, Sarah. Thank you for your time and for being here. I know you got a busy season ahead of you. Our Women in Community Impact's got a lot of great things coming up, and we are just honored and privileged to host you on the WCEG Network. Thank you, Penny Rogers, and our board for this opportunity here today, and wish each and every one of you a wonderful and blessed January and a great 2026 tax season.
Thank you. It's
Thank
good to see
you.
you. Thanks,
Good to
Penny.
see you. Don't forget my lottery ticket.